Well, welcome everybody. Monthly fireside chat. Sans Hadley. So you got the B team here. Me and DJ filling in.
Sean's on a well-deserved vacation. Well
Yes.
earned.
He called me earlier. He said, "I'm on the beach. Can you hear the waves?" And I was like, "What are you bragging?" So we've got a few kind of quick hitter topics we're going to do today. I wanted to talk about renovation loans. Sean had kind of promoted this as a deeper dive on OHFA, which DJ is going to get into. I've got kind of a look at the market. Figured it would be good to touch on CPI briefly and open up for any questions about the market. So I'll do a little share screen here if I can. Can I? Let's find out. I don't think
Yeah,
I can.
I think Kara gave you control.
I don't see a share button, unfortunately. There
If
it
you have any
is.
if you guys have any questions, throw them in the chat as well. There you go, Chris.
All right. You see what I'm seeing?
Yep.
Cool. So this is just a quick look at the uh, interest rate market, kind of where we're at the moment. The 30-year fixed down. This is a survey of several hundred lenders all across the country. Of that survey, they're saying the average is 6.85 right now on a 30-year fixed. Now, that number's cooked up a little bit. Expect that there's some cost in there that's not reflected on this. Some lenders are going to, report a lower number just to try and look, a little below market. So a bit of an asterisk with this, but it gives you a good idea of where we're at. Um, the trend right now is slightly improving. This is after a slightly negative day with the CPI print. It was a little bit ho hum, I would say, honestly. I kind of took it as good news. It went up, but not as much as they expected, so below forecast. So would have been awesome to see inflation go down. Everyone thought it would go up. It went up by less than they expected. So felt like good news at the end of the day to me. What did you think, DJ?
It was actually great news in the morning. The bond market opened up really positive, and then once the stock market opened, for whatever reason, the markets got scared and everything started going the other way, and we started losing a lot in the 10-year. We started losing a lot. We had some reprice notifications late in the day. Um, so I don't know who deciphered the numbers after the fact, but whoever started deciphering, whoever started chirping, just scared the markets and sent everything the other way. We did get some of that back this morning, so and that's usually what happens after you have an uptick in a market like that for no reason. Next couple 3 days here, you start to see the market settle back in, and I think that's what we'll see throughout the rest of the week here. But again, we're still higher for longer is what I keep saying. There is no imminent, nothing on the front that says rates are dropping into the low sixes or high fives anytime soon.
Yeah, I agree. Um, Feels like everyone and Mike was mentioning it when we first got on. What will Jerome Powell do? That's, everybody's guess. What will he do? And it feels like depending on when these inflation numbers come out, everyone starts guessing how do we think he feels about this? And then you go from there. Um, so we'll see. I think everybody's ready for a rate cut, but like DJ said, you're going to get a longer term better result with higher rates for a longer period. So,
Well, they were talking about possible July cut. That's not happening. Then they were saying for sure September, and now September is kind of even iffy.
mhm.
Um, and then you had, it's funny, we talk about how language can spur the markets. Stock markets were down this morning, bond markets were kind of flat. And then Donald Trump comes out and says that no, right now he doesn't think he's going to fire Powell. Stock market started going up, bond market started going favorable. So language controls the market versus everything else out there that we think controls the market.
That is true. A lot of speculation. A lot of speculation.
Right.
Any questions out there? from the rest of the fireside, the other side of the fire here?
Yeah.
Anybody?
The reality is too, guys, if you want a range of interest rates, you know, we've realistically been anywhere between 6.5 and 7.25 for pretty much most of 2025. That's your range, depending on your down payment, depending on your credit score, depending on the type of loan. You can figure anywhere from 6.5 to 7.25. That's where we've been in 2025 for the last 6.5 months.
Yeah, feels like even longer. I guess
Yeah,
we
it
had
has
that
been.
blip.
We've had our blips up. We just had a 2 week drop where we were able to throw some stuff in the low sixes, high fives,
Hmm.
for about an hour and a half, it seemed like, and then that went away. But the reality is 6.5, 7.25, it's been the range.
Yeah. All right, cool. Any questions or anything? I don't want to skip past anybody.
Yeah, there's nothing in the chat right now.
All right, cool. I'm gonna hop into, I think I need to kind of adjust the share here. There we go. All right. I wanted to get into our renovation program. It's often forgotten about that we have this. I mean, we try and push it as much as we can, but everybody wants to default to just a regular, traditional, 3, 4 week close FHA conventional VA. There is a program out there that allows us to kind of take the standard VA FHA conventional loan and take it. Oh, question out there? No? All right. Take it a step further and actually get a loan amount that includes some renovations post closing. I think we're in a market right now where there are some homes that are certainly sitting, and it's not necessarily that they're sitting because there's not interest. They're sitting because it's maybe not up to date, or it's beyond dated. It's in need of rehab or repair. This program could really solve, or these programs, I should say, could really solve that issue. And CCM's marketing has kind of pushed it to, hey, what if you kind of pitch this to a seller? You guys listed the home, it sat for a little bit, it's not moving. We don't want to take it off the market. We don't want to necessarily reprice. What do we do? Well, what if we considered giving the buyer a little more time, maybe an extra 30, 45 days on top of the normal process to have a contractor come in, take a look at the home, assess what repairs might be needed. The buyers get to have the fun with it too, of like picking out what they want in there, cabinets, countertops, flooring, and such. And you can couple that with a regular conventional FHA VA loan and do a renovation. Um, it's aside from the fact that we need a little more time because you are going to have a contractor come in and they're basically going to put together an itemized list of everything that needs to be done. You, I mean, aside from that, it's just a regular, loan. DJ, 5% conventional, or can they do 3% on this one?
5% minimum.
5 min on this one. FHA still 3.5%.
Hmm.
I just closed one. It was a duplex in Cleveland. Primary residence, FHA. He bought the house for 130, put 50 into it. We just closed, so renovations are starting now. But what a problem solver for a property that was certainly below what he had in mind, but was within his budget. I mean, he still got a $180,000 home at the end of the day. That's below the market average for sure. Um, Trying to think if there's anything else here. You got anything, DJ, about the
Yeah,
reno?
the one thing about the renovation product, first and foremost, it is a tremendous product, and it really will give you instant equity with the renovations you do. Um, there is a premium you pay in interest rate and cost because these are paperwork laden, they're time and effort laden. These deals will only flow as well as the contractor filling out the paperwork. If you have a contractor that doesn't fill out paperwork properly or timely, there will be delays in this. So the key is finding a contractor who knows what the heck they're doing. The beauty of it is our renovation team will walk these contractors through the paperwork to make sure they are filling everything out properly and getting us the right documentation. but this is a great way for a borrower to get into a property. I mean, I believe today's consumer wants turnkey everything. They want to turn the key, go in, and everything just be brand new. This is a way to do it. So don't roll this product out. If you got a borrower that's been getting shut out of the homes have been listed for about an hour and 53 offers, show them a house that's been on the market for 7, 10, 15, 20 days. If they like the area, if they like the bones, tell them they can have a new kitchen, they can have a new basement, they can have new bathrooms, they have new siding, new windows. Put the put the cost of this stuff into the mortgage up front instead of trying to pull it out of cash yourself or trying to do a HELOC down the line. Do it all up front. Great product.
Yeah, I absolutely agree. Throwing this in the chat for everybody. There you go. Um, Also, anybody out there have overwhelming POS issues, you can roll these into the renovation.
Mhm.
It's really cool. So if you've got something where it's like, oh, we need a new driveway, we need a new stoop, it's way more than the sellers had in mind. They don't have any money to fix it up front, but it's a POS item. You can roll it into this product, get it taken care of after you close. So
Hey Chris, scroll this flyer up a little bit
yeah,
or the other way.
other way.
Yeah. See where Chris's picture and name is there? You guys can have your name on this flyer as well. Um, Chris can send you an email after if you get Chris your email, Chris will fire off an email to you asking you to complete some information. There's no cost for this. We could put your name and joint market on every flyer that we have for every product we have for any open house flyers. Just by you completing a little bit of information and filling out your profile, you can have these flyers anytime you want.
Yeah, we have marketing assets, in the thousands, that we can absolutely add your contact information, your headshot, give you the exact same thing that we have here, free of charge. So, good call.
Hmm.
All right, cool. Let's see. All good in the chat. All right, DJ, I've got OFA pulled up. Is there a page you want specific, or do you want me to start with the rates?
Just scroll up on the rates a little bit here.
All right.
Yeah, so you might have heard us, and I know Sean put in the Keller Williams Facebook page that OFA made some changes July 1st. These changes, this is what you're looking at right here. OFA used to have a couple of different down payment assistance options. They now have just one option for down payment assistance FHA and one option for down payment assistance conventional. It's 3.5% down payment assistance for FHA, 3% for conventional. And you can see here that these rates are tremendous. Before they made this change July 1st, these interest rates were easily 1 to 1.5% higher than what you're seeing. And I know we as the lending world were shocked when this came out July 1st to see what they did with the interest rates. And right now, just know this, if your clients fit this product with and don't need down payment assistance, but we can get them that interest rate, FHA at 5% for the first time home buyer program, conventional 5.5% 30-year fixed for the program, minimum 3% down. If they fit into this, we're putting him in it because he's good 1 to 1.25% below market right now. So just know that this is what we're pushing on. Now, I don't want to use the term pushing, but this is what we're putting people in. This is the rate we can get your customers. And you see there the Ohio heroes there. A hero is firefighter, police, teachers, nurses, doctors, um, dentists, I think too. I don't think dental hygienists are in there, are they, Chris?
I don't think so. Veterans?
Veterans. But you see, there's a 0.25% interest rate discount for them. I mean, think about this. If you have a police officer that doesn't need a down payment assistance and is going FHA, they can grab a 4.75% interest rate now. They do not ever have to worry about refinancing, ever,
Yeah.
because I don't
Yeah.
think you're going to get a rate like that again. To make it worthwhile. You'd have to get a rate down about 4%. I just don't see it happen. So if we can fit the heroes into these programs, this is what we're doing here. A little bit further down is the MTC program. That's called a mortgage tax certificate. They can get up to a $2,000. Nothing they need to do for this. If they qualify, we could put them in it. They get up to a $2,000 direct tax credit on their tax returns for as long as they stay in the loan. What that means is if you're getting a $3,000 refund, you're not going to get a $5,000 refund. If you owe $2,000 in federal taxes, you will now owe nothing because of this credit. That is a direct credit towards your taxes. So that's another reason for us to put somebody into the MTC program. Um, and now the MTC program comes and goes because of the popularity of it. We might tell you we have the money today. I go to put somebody into it and register it, and they might tell us they're out of money. Maybe by the first of the next month, they might have some more money. So that's one we got to stay on top of a little bit more than the other ones. These interest rates have been here since July 1st, so that's what, 2 weeks now. They do have the ability to change daily in lousy markets or good markets. They could get better, but just know that like any interest rate, this could change. But right now, they've been holding strong since July 1st. The other first-time home buyer programs we have is what's called our CCM Smart Start. That's where we can give them up to 2% towards the purchase of the home to cover down payment, closing cost points, and prepaids with a maximum of $4,000. You need to be a first-time home buyer program, a first-time home buyer for that. And the maximum loan to value on that is 3% down. It's not designed for somebody with 5, 10, 15, or 20% down. It truly is to help that first-time home buyer. So again, max loan to value on that one is 3%, and it's capped at about $2,000. And I think for very low income, we can get as much as $5,250. The only way we can tell if you fit into the CCM Smart program is if we have their information into the system, because we kind of click a tab and it tells us everything that we can offer them down payment assistance wise that we may not know about, because it could be based on the area they're buying in, it could be based on the area that they're moving from and currently live in, but we don't know that until we put them in the system and push that button to know whether they qualify. And you might say, well, they're not ready to apply for a loan right now because they don't want their credit pulled. Just know this, we're pulling soft pull credit reports on everybody right now. That's no inquiry. Nobody knows we pulled their credit except you and me and the client themselves. So again, it's another reason that somebody shouldn't be concerned about applying for a loan right out of the gates here. And I also tell people when I do that, it also enables me to run payment scenarios for you when you're out looking for homes. Because I assure you, when somebody says, well, we're not buying for 3 to 6 months, as soon as you set them up in your portal and as soon as they start searching homes, they want to buy, all of a sudden they find a house that they can't live without and they're not ready to go. Soft pull credit report, the pre-approval allows them to be ready to go if they find a house that they can't live without. And believe you me, we've got a product for pretty much everything out there. We even have land loans, but we have to broker it out. So I tell you, we don't do land loans, lot loans. Just because once you broker a loan, you lose control of it. If somebody's looking for a lot loan, I usually send them to my friends at the banks that I've worked with over the years. Those are the people that do the lot loans. I don't want to broker something out and lose control of it and lose a relationship with you guys. But just know we pretty much do everything that's out there.
Well said. That MTC program too, you don't have to get the down payment assistance. You can go with a regular loan that we offer and just get the extra mortgage tax credit.
Mhm.
The closing costs are a little bit less. That's only the state charges $500. We need a few more documents. They still look at your income to make sure you're not over the income limit. But that state income limit is up to what, like $119,000 per household, right?
Right. And the other side of coin on that too is if you've got somebody that's tight on qualifying and we put them into the MTC, there are income adjustments that we can do and give them a little. You take that $2,000 divided by 12, I think it comes out to 166.67 a month. We can actually count that as income to help them qualify if they're that tight, believe it or not.
Mm-hmm.
That's how cool that program is too.
Yeah. Um, Education requirements on OHFA, any of the OHFA programs are going to require that they do. Uh, it's basically an online class. At the end of the class, when you're done, you schedule a time to speak with someone at a homebuyer resource center. There's a handful of them all across Northeast Ohio. You get on the phone with someone for 45 minutes, not you, but your client gets on the phone with this person for about 45 minutes. They go through a household budget and just make sure that, hey, you're a first-time home buyer, you're putting some money aside for utilities, right? Okay. They're more or less just helping them be prepared to be a homeowner. Very easy process. I've never heard anyone complain all that much about it. Um, yeah. I mean, it's a really, really awesome asset that we have access to. In CrossCountry Mortgage, we are a preferred lender of this program. If you go to the lenders tab within OHFA and you click, I'm pretty sure CrossCountry is the first one listed. So you will see that we are doing this program quite a bit. We're very familiar with it. Um, yeah,
And the other
I
side
don't,
of the coin is too, just knowing any first-time home buyer program, which is essentially a 3% down loan, all borrowers, because of Fannie Freddie, they're going to require a home buyer education. It's all online. It really is useful information for people. We assume that the renter has an idea what home ownership is. Most of the time they don't. So these home buyer education classes do touch on home ownership, as if you've just were dropped on earth and have no idea what the heck a house was. So it's not real basic, but it's basic enough that everybody can understand it and relate to it and get something out of it. So again, any 3% down program is going to require first-time homebuyer education. It's not a cross-country mortgage requirement. It is a requirement of the product, a Fannie
yeah.
Freddie product.
The funny thing about it is too, every time someone takes, oh, sorry, someone's ringing it on me. Every time somebody takes the class, they wind up telling me, I almost wish I did that first before I did anything else because
Mhm.
it's pretty informative. I mean, most people learn something from it. And if you're really savvy and you know it all, you're going to fly through the class and have it done in 45 minutes to an hour anyway. So, um, any questions or anything about any of the loan programs, the down payment assistance, OFA?
So let's go to the other extreme from being a first-time home buyer. It's
Yeah.
the reverse mortgage.
Yes.
Um, Reverse mortgage is for the senior citizen. If you've got a mom, dad, grandma, grandfather that is still living in their home, wants to stay in their home, but is having trouble affording that home, the reverse mortgage is there to keep these people in their home. They still have to pay their taxes and homeowners insurance, but it will essentially take away their existing mortgage, so they don't have a mortgage payment. It will keep them in the house. There's various um, renovation products. I'm sorry, not renovation products, reverse products, where they can actually get a home equity line of credit to use if there's any repairs that need to be done to the property, or just have some cash on hand in case they ever get in trouble. But this is a way to keep the elder person in the house, um, that is still capable of staying in the house, but just doesn't want to go into assisted living. Reach out and ask us about the reverse. We have a great reverse team. I just closed one about a month and a half ago, less than 30 days. I will say this, these are expensive products. When I say expensive products, depending on loan size, you can figure ten to $15,000 in fees. But it's worth it. And there's just no way around it. This isn't something where you shop lenders for, okay, are their fees going to be half? Reverse mortgage fees are pretty much the same throughout the country. You can spend figure at least a minimum of 10 grand or more, in these things. And nobody's going to take mom and dad's house. That's one thing that the kids always worry about. If I put them in reverse mortgage, do I lose what equity we had? If mom and dad, you put them in reverse mortgage and for whatever reason they happen to pass 6 months to a year later, there's still a boatload of equity in there. That goes to the kids. It doesn't go to the lender. Um, so again, great product. Don't be afraid to talk about this to the seniors. If anybody has any relationships with senior centers or anything like that, would like to do a uh, um, reverse webinar, we can do that with the reverse specialist. I'll do a Zoom. If we get enough people to come out in person, do it. But like I said, going from one end to the other, the first time home buyer to just trying to keep somebody in their home, the reverse mortgage is a great product.
Yeah, we have a department basically, same deal as the renovation loans, where as good as we are, there's a specialist out there that knows these products front and back, and what we can do is we can kind of pull on their knowledge to come in, set up a Zoom, or a meeting of some sort, to basically walk through the whole program with your client. and kind of tell them exactly what the benefits are, run the numbers, and fill them in on what benefits they could be taking advantage of. This flyer that breaks down the benefits of the program, I just put in the chat as well. So if you have any questions with that, like I said, let us know. We're happy to reach out, and this is, no commitment. We would, basically just do a consultation call and help answer some
Right.
questions.
Right, because there's a lot of unknown in this program as far as, a lot of people don't know about it. Our reverse specialists are tremendous. So again, you want to joint market on this, you want your photo and information on any of these flyers. If you're on the east side, email Chris. If you're on the west side, email me.
Okay.
We'll get you signed up for this. No cost, no obligation, but you can have any flyer you want with your name on it and our name on it as well.
Cool. Any questions out there?
Is there any other products or any, that you'd like us to talk about today? The non-QMs, the 1099, the DSCRs for investors. Is there anything else you guys want to know about today?
Or anything at all? Had any weird trouble with another lender? Anything?
If you guys could jump into the DSCRs a little bit, I have a portfolio seller right now, and he's not super interested in it in the past, but we have a good offer coming down the pipeline either today or tomorrow, and I need one, positive points to present to the seller, and two, I need a little bit better understanding of it myself.
Okay. So DSCR, debt service coverage ratio, that's what that acronym is. Basically, what it means is the individual that's applying for the loan is not providing their own personal income to qualify. The property itself is qualifying on the income side based solely on the anticipated income of the property, whether that be the current existing leases, or if we do an appraisal and the property is vacant, the appraiser can complete a rental analysis and basically say, based off of other market rents in the area, here's what I expect the home can be rented for. There's some wiggle room in the ratio, but what we're looking for is we want to see that what the anticipated rental income is covers the mortgage payment. If it's a 1-to-1 or better, you've got a deal basically. The buyer's carrying the down payment and the reserves and the credit score. Depending on the lender they go with, those could vary a little bit. For us, they need to have 20% down, 6 months of mortgage payments and reserves, and they got to have a 620 score or higher. If they check those three boxes and the income of the property meets the mortgage payment, it's a slam dunk deal. It's very easy. The trade-off, which probably for your seller is not of a concern, but the trade-off is there's just some extra cost with this program. Obviously, with no income from the individual backing up, the liability is a little bit higher, right? It's a little riskier product. It's going to have a slightly higher interest rate, might have a little bit extra closing costs on the lending side, but it's a super easy program. It's a problem solver. If you have someone who's self-employed and they're writing all their income off on their taxes, and they still want to buy an investment property, this fixes that problem super easy. I don't even want to know your income. Don't even fill it out. We don't ask for tax returns. We don't ask for anything. We just want to see, their credit, which we'll pull, and some bank statements to show they've got assets to cover the qualifications.
Yeah, we don't even put employer on the application. All we put on the application is the assets.
Yeah.
That's all we're verifying. And the beauty of I'll call it our portfolio department more or less is the amount of exceptions that we give. So if you get the right borrowers that don't fit exactly what we're looking for and they come in a little bit less and they've got assets, we'll give them an exception. So these guidelines for these type of programs are not concrete. And just know this, for any loan, whether it's 3% down, portfolio, DSCR, 1099, assets drive approvals. So if you have an asset heavy borrower and they really don't fit the box, those assets could get them approved.
Yeah. Yeah, they will, if you've got money in reserves, I call it rainy day funds. That's what I joke. If you've got plenty of rainy day funds and they know you're very well qualified, and if you're self-employed and you have a down month, you're not going to choose to not pay your mortgage that month. They want if you've got plenty of funds, we can probably find a way to make the deal work.
Right.
Dane, does that answer your question? Perfect. Perfect. All right, cool. Anybody else? Any other interesting loan programs out there?
Like I said, if you want to include any flyers, West Side, email me. East Side, email Chris.
Yep.
And we'll get you set up. It takes 5 minutes to fill everything out.
Yeah, it's very easy. Very easy. And all you have to do is say, hey, I really like that reverse mortgage or that renovation and we've got even more stuff. I mean, we could go on and on for a while. A breakdown of all of the different programs we have, all the alternative programs we have, all the portfolio stuff. You name it, it comes in a very pretty, flyer that can have your info on there. Well, cool. Do you have anything else, DJ?
No, I think we covered, like I said, everything from the first-time home buyer to the reverse. And here's the thing too, if there's a topic you want us to talk about in the future, about anything, just let us know or let Carrie know, and we'll get it on the schedule.
Yeah, we're happy to, talk shop any programs or any topics. That's kind of the point of this is, rather than teach a 45-minute class about one specific thing, this kind of allows us to open it up to, whatever you're running into in the market or whatever's kind of the new hot thing. There's a question, who all qualifies? I'm not sure what program you're referencing. Um, I almost want to joke. If you got good credit and you got money in the bank, pretty much everybody's going to qualify for something.
Well, as far as if it's for the DSCR question, it's for investment property only.
Yeah, yes, good point. Yep, no primary
Those are for
residence.
investment property only.
Yep. Cool.
All right.
All right.
Appreciate y'all showing up today.
Yeah, thank you. Appreciate
Have a
it.
great
If you
day.
need anything at all, let us know. And Hadley will be back next month.